Hello, I'm John Slazis from Dharma Capital Trading. We offer fact-based trading solutions. What are fact-based trading solutions? What fact-based trading solutions are not are subjective opinions, subjective biases. We do everything that we can to zero things down to if-thens. So what are fact-based trading solutions? Fact-based solutions are objective truths. What was yesterday's high, low, last? Those are hard truths. That's what our analytics are built from. True objective indicators that you can use as a baseline for your opinions, for your subjective insight, for your intuitiveness. This is where we differentiate ourselves from other people and other analytics firms out there that offer a subjective technical analysis. It's this technician's interpretation. And they're going to skew that with their own biases. It can't be avoided. It's part of our wiring. And for that trader, it may work. And they may have some skill sets and experience, and they may do good work. But is it going to work for you? And think about your own opinions and subjectivity that you live your life through. You change those opinions in a moment. Boom. It's different. Not only, and it's not just the moment that you make the decision to change, but those decisions, they start to well up, right? It starts to, your opinion starts to form, and that bias starts to change. And so you need to have your own baseline, and you're going to have your own opinion as well. And what you need as a foundation to make things scalable is you need a statistical baseline. You need a statistical foundation. You need a what's more likely to occur, a probability fact check. Using the previous period high, low as an example. Those are hard facts in the close. Well, if you're trading if your net change positive on the day, you're above the previous session close. Negative on the day, you're negative. Bottom line, you've got the market's given a bias from the close. Are you trading above yesterday's high point? Is the market above yesterday's high point and you're getting a sell signal on your trading tactics? Well, that might be, the signal may work, you may make money on that, but you're taking on more risk. It's not what's more likely to occur. The market's moving higher. It's telling you that because it's above the previous period high. So you need to bet smaller if you're going to take that tactic. Or if you're going through a drawdown and you're just looking for the optimal trades to take, it's not one to take. It's not in alignment with what the market truths are. Now, if the market flips, now it's trading back below the previous period high. Now it goes net change negative on the day. Things are changing. So aligning your tactics and your subjectivity with a benchmark. Here's what's more likely to occur. And if your position is against what's more likely to occur, you need to know that. You need to do something about it. And if it is in alignment, you need to not do anything. You need to take a step back and, hey, let the market pay me. I'm in alignment. And so we provide these statistical facts. And we do that by identifying the context of the market, what the market state is, what's the condition. Are we trending, non-trending? Is that trend accelerating? Is that trend correcting? What's the environment? We've traded these environments, but defining that at the start of the trade period to give you that foundation for expectations. So you're aligning your expectations with what is the facts, what is the truth, what's the condition. The next thing we do is define the structure of that condition. Where does that condition change? If we are in a trend state, where is it no longer a trend? A positive trending market. Market's making higher move lows, higher move highs. Well, if the market breaks structure and it's no longer making higher move highs or higher move lows, then it's no longer trending. Those alignment points are where we want to participate in trading. That's where the best risk reward is, because the market, there's going to be liquidity there because the market is at an inflection point. Are we making a decision to persist with this trend or transition into a new trend? And if we understand these contexts, we understand what a bull trend is. We understand what a bull trend correction is. And we're going to trade those contexts differently. And we understand the structure of those contexts and where that will be proven that this context is going to persist. And so we can anticipate these characteristics of a trending market or a corrective market. And we can also anticipate where those things are going to change. So we can focus our energy at these inflection points of change, of decisions. And so we get in, and so if we understand the context and the structure, we know what's more likely to occur and how the behavior of the market should be. So then when we're in the microstructure and we're reading the tape, is the order flow in alignment with the expectation of what's more likely to occur? And if we start to shift, and if the order book is not supporting it, and we're starting to break structure, that's a tell in the moment that things are changing. So we're not hoping that this, what we've identified as a positive context, is going to continue and a positive trend is going to continue. We're going to align our tactics with a potential transition, and we're no longer looking at the market or expecting the market to trend because things are changing, and we can see that in the order book, and it's happening at an inflection point where we know the market's making a decision to do that. Our analytics are identifying where's the next step. Where's the next step? Where's the next inflection point where the market's going to make a decision? And it's those areas of inflection that we want to spend our energy. We want to really dive into things. But it also gives us insight to the duration, the opportunity, how much reward is in this opportunity. And based on that reward, we can manage our risk. So we can put ourselves in good, favorable risk-reward ratios. So we can lose many more times than we have to win to end up on top. Always putting ourselves in situations where risk a little, lose a little, lose a little, lose a little, lose a little, make it big. Psychologically, that's harder to do because you're taking lots of little losses. But then when you hit it big, it way overcompensates for those small losses. And many strategies are the complete opposite because it makes you feel good. I take little win, little win, little win, little win, little win. I'm a hero. Boom, I blow out my account. Okay, well, now I have to regroup, and the psychological aspects of having little wins, little wins, little wins, little wins makes you feel good. And you have 10, 15, 20 days of a bunch of little wins, and then one day you give it all back. And you're sad for that day. And then you have the weekend, you get over it, and you're back at it. Little wins, little wins, little wins, and you're feeling good. But at the end of the day, your P&L, you're treading water at best. Versus taking little losses, little losses, little losses, big wins. Now all of a sudden you're building equity. And so that's easier to do when you have an objective statistical baseline, because you know the odds are in your favor. You know this is what's more likely to occur. So I bet small, take money off the table quicker when the odds aren't in my favor, or don't trade at all. And when the odds are in my favor, we bet bigger, go for bigger duration, and stick with our position. It's interesting when you work with our analytics, you'll find yourself, in situations where you know that you're against what's more likely to occur. And you can only do that so many times, especially if you take a loss during those times. Because you end up realizing that I'm hoping for what I know not to be true this one time. Because you're hoping what I know is more likely not to occur is this one time is going to occur. Because I'm going to hope and I'm going to pray. And I'm going to call on the trading gods to make it different this one time. To get me out of this mess I put myself in. And what will happen is you'll switch. Immediately when you have the realization that you're going against the odds, you'll start to get out of that. And this will happen quicker. And this will happen more in real time. The goal with our fact-based trading solutions is to enhance what you currently do. The ideal situation is you have this fact foundation, these statistical truths of what's more likely to occur and where that occurrence is going to happen. So you know what's more likely to occur and where the market's going to make a decision. And then you combine that with your intuitive function. With your ability to be in the moment, in the market, in the order book, reading flow, reading the tape, with that as your statistical foundation. So when you have objective facts versus subjective opinions, your subconscious likes that. It's a truth. In fact, a lot of anxiety in trading comes to your body fighting against you, saying that this information that you give me is subjective and it's not true and there's a problem with it and I don't trust it. And that's where it feeds on your hope, and you're fighting your that angst, and that anxiety builds up with your body saying, change, stop it. This is not right. So when you have objective facts, your body gets calm. And it makes it easier for you to get in sync with the flow, with that order flow, with what's happening in the market real time. And that's when you have your best days, when you're in sync. You're not thinking. And you need that in the moment at these critical inflection points. At these points of dynamic equilibrium. The market is really making a decision there, and all the liquidity is centered there. And then when you move away from it, you can take a step back, look at the facts. Fact is, the market's trading in these segments. The market's paying out this today. And I'm going to get as much of that as I can. Focus on your P&L management. Now all of a sudden the market's coming to a decision point. Lock into the order book. Is this move still true? So that's what we're doing. We're giving you that statistical baseline. We're giving you that objective benchmark foundation. If you're only focused on the microstructure, we're giving you the macrostructure picture. We're identifying that context. We're identifying the structure of that context. And we're breaking down what the optimal strategies that will occur within that state and structure context. And also, if that is going to transition and change, we're going to give you a hedge strategy theme for that. So come check out Dharma Capital Trading. Go to our website. Take a 2-week free trial. See how our fact-based trading solutions can make a difference in your trading. I look forward to working with you. Enjoy your day.